Real estate investing is a great way to begin generational wealth. And it's also a great way to build passive income. But the main question is, how do I get started? A lot of people reach out to us and want to find out, how do I get started with my first rental property? Today, we're going to talk about that, the best ways of getting started, the different programs that are available. How do I build my credit? How do I save money for real estate investing? We're going to discuss all those items today on the Mortgage Motivation Podcast.
The biggest crush ever branded on my brain. When I laid eyes on your back in the 6th grade. My first dream girl called her Ella Jane. She might have never.
So the first thing we have to do is figure out what is your strategy. All right. I will break this down into two different categories. The first way is what they call like a house hack. If you moved into one of the units, so say if you found a 2 to 4 unit, if you moved into one of the units, you need very little money down. What a great way to get started. So if you take the FHA approach, you can move into one of the units, put down 3.5% down, and you have a rental property. One great thing about going with the FHA, so say it's a 2 to 4 unit, doesn't matter how many units, but you could use the additional units to help you even qualify as far as income purposes. That's the house hack. And say the unit is vacant, you can use the market value for the projected rent from each one of those units to help you qualify for the loan. All right, so just a real quick house hack in there. But yeah, you can do that. You can also do it with the VA loan. So coming in with the 0% down to move into one of the units, and then you rent out the other unit. So what a great way to get started with your real estate investing career. The second way is if you do it the way that most traditional people would do it, if you was to put down 15 to 25% down as a down payment. So 15 to 25% down. So the whole idea here is you got to understand that you need to have money for you to take this approach. You got to save money. So if you ever want to get into investing, you want to start saving money. So it doesn't matter if you go with the FHA route or VA route, you want to start saving money. So 15 to 25%. And I gave you that range because it all depends on your qualifications as a borrower. Sometimes you have to put down 15%. Sometimes you have to put down 20%. Sometimes you have to put down 25%. There's a wide range of different options out there. So let's just kind of keep it between those two. So between 15 to 25% in order for you to make that purchase. All right, the second thing that we want to get into is, all right, once you have an idea of what you want to do, you got to get yourself pre-approved. So you want to sit down with your local lender and find out, what are my qualifications? And honestly, these days with ChatGPT and Google, you don't necessarily even have to reach out to a loan officer to get an idea of what is needed. But I'm going to give you the guidelines of what it takes in order for you to have a successful career. So not even with a real estate investment, but buying a home anyway. If you get yourself pre-approved, there's a few things that we look at as a mortgage broker or as a loan officer. One of the first things that, of course, as you know, it would be credit. If you are looking to purchase a home, period, I would say your goal is to have at least a 640 credit score. With investment properties, I would say at least a 680 credit score to really utilize the programs the way it should be. That's the best way. The higher your credit score is going to be, the lower your interest rate is going to be. If you come in with the bare minimum in 2025, the bare minimum just does not work. You don't want to go that route. You want to come in with the highest credit scores that you can. So even if you have to wait a little while to get started, you want to work on your credit. The higher your credit scores, the lower your interest rates. That's as simple as how it works. There's no easy way of doing this. You got to work on the credit. The other thing we'll look at is your income. We want to see if you have a solid income that's coming into the household every single month. We want to see how much income you have coming in and what type of income you have going into the household. So if that's commission income, if that's your W-2 employee, or if you're self-employed, we got to get that part figured out to make sure that we know exactly how to structure out your loan. The other thing would be is your debt to income ratios. So that's how much money you got coming in versus going out. That's going to be key because that's going to let us know what's your maximum amount that you can afford by looking at your debt to income ratio. Not always the best way of using that, because I always like to say, okay, well, even though your DTI is here, what's a comfortable payment for you? So I kind of match those two together to make sure that we are coming up with something that makes sense for you and your family. The other thing would be is your assets. How much money do you have saved? Do you have like any type of CDs? Do you have any stocks? We want to look at all of that so we'll know how much money we have access of putting down. And also, right behind the assets is your reserves. When you're looking to buy an investment property, look to have at least 2 to 6 months of reserves as a minimum. Depending on what type of loan program that you apply for, they're going to ask for reserves. They want to make sure that when you have an investment property, worst case scenario, if the income stops coming in or anything drastic, you have the means of still paying for that mortgage. That's going to be key. So having reserves is important. I don't see it being advertised a lot when I look at social media, but it's extremely important. And if you don't have the reserves, a lot of times you will not qualify for the loan itself. Another thing we're going to look at is the cash flow. Is it positive or is it negative? So when you look at the properties that you're looking to purchase, we want to make sure that you're receiving positive cash flow. And what that means simply is, are you making money off of this investment property? Before you even write an offer, we want to make sure that this property makes sense for you. So when you get yourself pre-approved and we're looking at different opportunities for you, we want to make sure that you're getting positive cash flow. Now, I hear sometimes where people say, well, it's okay sometimes not to make money or to be in a situation where you're in a negative cash flow. I don't agree with that at all. You don't want to start this off in a negative because number one, it's stressful. And number two, you're not making money off of it. This is called an investment property. Now, granted, sometimes people look at, okay, well, the property itself is, increasing in value. But you want that monthly cash flow coming in, because if you're working on passive income, that's how you're going to get it. So I only concentrate on positive cash flow. So once you got yourself all pre-approved and we already know what your payment is going to be, we already have an idea what you're looking for in the positive cash flow, the next stage we're going to move into is the offer itself. So once you have found a real estate agent and, of course, you're out looking at different properties, they're going to make sure that the investment property makes sense for you. And once you do that, we're going to write an offer. The offer basically going to say is we're going to offer this amount for this property, and here's our terms. So you'll let them know how much money you're going to put down. And if there's any additional terms on that offer, that's going to be placed at that time. So once you put the offer in and say the offer gets accepted, you go under contract. So that's going to be the next stage, is underwriting. Once you get to the underwriting stage, that's when the loan process actually starts. And when that is going on, you're going to need what they call a home inspection on that property. When you order the home inspection, the home inspector is going to go out there and tell you if there's any issues with the property itself. They're going to look at that property from top to bottom, and they're going to identify any potential issues or any potential hazards with the house. And that's going to help you make a determination if you want to move forward with this property or not. Always at the bare minimum, have at least a contractor to go out there with you just to make sure that you're buying a property that makes sense. If you don't buy properties all the time, you don't have the eye for it. So let a professional take a look at the property just to make sure that you're making a good decision on that property. All right, the next stage is going to be underwriting. That's when you actually fill out your application, get that submitted into the underwriter. The underwriter is going to get a chance to take a look at all the documentation that you submitted. So if that's bank statements, if that's your W-2s, if that's your tax returns, they're going to look at all of that. They're also going to look at the title. They're also going to look at the property itself. They're also going to just request certain things from different agencies to make sure that this loan makes sense for you and that you're not signing up for a bad deal. The lender do not want to give you money if it does not make sense. So they got to make sure that everything that you submitted is accurate and it makes sense for them. They want to make sure that there isn't any issues with title, because they want to have a clear title on that property before they allow you to make the purchase. And also they want to make sure that the house is going to appraise. That's another thing that's going to happen along with your inspections. They're going to get the house appraised as well. We got to make sure that the value of that property is going to come in. So if you're buying a house at $600,000, we want to ensure the house appraises for that amount. So the appraised value and also everything else will come together with that, just to ensure that there isn't any problems, any issues with the home itself. So now we're getting towards the end. So you made an offer, your offer got accepted. You went into underwriting, everything went through just fine. The last stage will be closing. You go into settlement. So if you are in an attorney state, you go into your attorney's office. If you're in a title company state, then you'll go to the title office. And that's when you sit down and utilize one of these guys. You use a pen and you sign 10,000 documents. Okay, we're getting better with that. A lot of lenders are making sure that the documents aren't so bad like they used to be, but you're going to sign the title agent that's going to be there, or the attorney. They want to make sure that you fully understand what you signed up for. So they will go over all your mortgage documents. They're going to allow you to take a look at the deed to just make sure that everything is accurate and is correct. And anything that needs to be dealt with at that time, as far as like maybe a problem that happened with the seller, is going to happen before you sign all your documents. So everything would be agreed upon there. And the last stage would be you receive your keys to your new rental property. All right. Once you get to that stage, I just want to say congratulations on your new purchase. Now, that is the basic ways of buying your first rental properties. There are more advanced ways of doing it, but you got to have at least 15, 20, 25% in order to look at those. So what I mean by that is we can discuss how do you place a property in an LLC? How can you just purchase a property without using any of your income? But that's for another video. So we'll get into that. But today we're only going to talk about the traditional way of buying a home. So the house hack of you moving in. The other way is if you put it down to 15 to 25% down in the actual process. So once you do this once or twice, it's going to be a breeze for you. So that's all I got for you today. If you have any questions, make sure you subscribe to the channel. Put a comment down here below if you want me to answer your questions, or reach out to me. My number is 302-469-0709, and we could go over your scenario so we could really dig into the details of what you're looking to do. All right, let's make it happen. 2025, let's go.